crude oil prices have seen a sharp plunge in the last 2 months, which has had a significant impact on fortunes of oil exporting countries. The softness has come due to several factors, including rapidly rising supply, uptick in the US reported inventories, and expectations of slowdown in demand. Let's do a three-point analysis on how will OPEC meet affect the crude oil prices going forward. 1. What are the expectations from the OPEC meeting? Well, there is a growing discord within the Organization of the Petroleum Exporting Countries, or OPEC as they are called. There are even concerns over the continuity of the consortium. OPEC meeting is in Vienna and it kicks off today to decide the cartel's future course of action. There are strong expectations that there would be some sort of a deal to take substantial barrels off the table. There is also an estimation of 1 to 1.4 million barrels per day production cut. But how much each nation might be willing to forego would be something to watch out for. 2. What's the take of member countries like Qatar, Saudi Arabia, Russia and the United States? Well, Qatar has announced plans to exit OPEC, citing limited benefits from the cartel. It has highlighted that they want to focus more on increasing their gas exports. Remember, Qatar accounts for a mere 2% of the OPEC's oil production, but is one of the largest natural gas exporters in the world. And the strategy only seems reasonable. Now, during the last few weeks, Saudi Arabia has been aggressively pushing to cut production in order to bring stability to the tumbling oil prices, though the nation still would not want to urge the United Nations. Also, if you see, the US Senate, meanwhile, has passed a bill ending American support for the Saudi war in Yemen, significantly upping the pressure on the country not to cut by too much. Now, Russia has been less vocal on the production cuts, as its currency is not much affected by fluctuations in oil prices as compared to Saudi Arabia. While on the upfront, Russia has expressed its intention to continue managing the production, there seems to be skepticism over how much Russia would be willing to forego. US has been vocal and aggressive about bringing oil prices down, as US oil inventories have seen an uptick in the last few weeks, and with inventories piling up, it only indicates oversupply in the market. 3. Where does India stand? Well, India has strong engagements with the OPEC nations and sources nearly 83% of its crude oil. Rising crude oil prices have had a serious impact on the current account as well as the overall fiscal math. And there have been speculations that India is looking for countries outside of OPEC to source its crude and gas supplies, such as the US and China, in order to get more competitive prices. Now, momentary exemption from the Iranian sanction until May 2019 also comes as a big relief for India. While the prices seem in a bearish mode for now, a rebound cannot be ruled out. With volatile geopolitical dynamics, decisions from the OPEC meeting might define the contours of the near-term price movement.